Good morning, everybody. Welcome back to Crypto Warehouse. My name is Mike. It is June the 6th at 11 a.m. Central European Time. And we are back with yet another show. We're going to go over the charts with you today, tell you what we think is going to happen with Bitcoin over the next couple of days. We have some indications. We will go through them. We have X-Files. We're going to go through plenty of content regarding Bitcoin, regarding Gary Gensler, regarding stacks, staking strategy, a brand new hot coin, USDL. We are going to be covering that. I haven't seen it mentioned anywhere else. We're going to cover that, and then we're going to give you our final thoughts of the day, and we're going to do all of that in 1 hour. If you are new here, if you've never heard us before, if you don't know who we are, before you listen, make sure to smash the like button or the subscribe button or the follow button, whatever you have in front of you, press those buttons. We still have our $74,000 target in the bottom corner. That will change in the next few days. It's been there since March. It's as old as time, but it is going to change. Bottom left-hand corner, we are over 135,000 followers. That is across all of our different streaming platforms, all of our different socials, 135,000. Please help us. We're trying to get to 200,000 by the end of the year. It's touch and go. I think we're going to get close, so make sure to do that. And today, the theme of the show is The Last Dance. Now, many of you don't know who Michael Jordan is, haven't seen the Netflix series, that's fine. It's not to do with that. He's made it popular. The Last Dance is the end of an era, if you like. And are we at the end of an era? Are we at the end of the $50,000, $60,000 Bitcoin? Are we at the end of the beginning? Are we going to see this parabolic move that everybody is talking about? Well, I think I know the one catalyst for this. And that's something which I'm going to go through when we get to talk about Bitcoin, because it's not just a rumor anymore. There are more obvious signs that it's going to happen, and I have alluded to it. So make sure you don't go anywhere, and I will let you know why I think this is the last dance for Bitcoin. So a few good mornings to Solo Sky. Chris is in chat, Hidden Agendas. Mags, Only You is here. Remember, say hello in chat. If you type into chat, by the way, it helps with the algorithm. Believe it or not. So the more you type, or even just type the 1 or 2, whatever, it helps the algorithm realize that it's a live chat and not fake people in there. So make sure to type from time to time and say hello. I have turned one of the chats off today because I'm fed up of the spam. So one of the chats has been turned off, and I will only turn it back on when it's fixed, because there are too many scam links being pasted, and I don't do that. We are not here to allow scammers to operate on our streams. It's just not on. And if that means we have to turn one of the streams chats off, then that's what we have to do. Now let's move very quickly onto the charts. Market cap is up over 2.5%, coming in. Again, we started on here when the market cap was, I don't know, was it about 800 billion? And we were saying, 1 billion is the key. That's what people are going to look at. Traditional finance isn't going to consider us until we're at 1 billion. And now, believe it or not, we are approaching 3 trillion. What are we away from 3 trillion now? 15%? What would that give the Bitcoin price? Roughly $80,000 a Bitcoin to get to $3 trillion market cap. I don't think those two things are unrelated. And remember, I think the total market cap for crypto is going to get somewhere near 9 to 10 trillion in this bull run, and maybe more if the news that I've heard is true. So I'm going to keep you all on suspense, because I don't do enough suspense on this channel. There's not enough jeopardy on this channel. Right then, so 24-hour volume just under 100 billion. Again, same as yesterday. Bitcoin dominance, ETH dominance combined are about 70% of the market. Sorry, I'm being messaged by the Oracle, who's in a meeting right now. So tomorrow we are going to be dual streaming. This is exciting news. We're going to be dual streaming. I'm going to announce it on socials. But there's a very special birthday anniversary of one of the channels that we stream on, and Brogan has been requested to appear on the live stream, which is a massive honor for us as a channel. It's a great experience for us, it's a great experience for Brogan. So hopefully we will be able to announce that on the socials today, and then you can come and join in, because they're going to be giving away prizes and all those kind of things. So I'm being slightly distracted at the minute. Anyway, Bitcoin is coming in just under 71,000, Ethereum just over $3,800. If anybody knows where I can buy an edible hat from, this is a serious question. I said that Ethereum would not be able to hold above $3,000, and if it does, I will eat my hat. I haven't been able to find anywhere to buy a hat from to eat. So if anybody knows of edible hats or wants to make me an edible hat and send it me in the post, I will eat it on a stream. And that is an absolute honest fact. Anyway, BNB, look at BNB, over $700. My target for BNB this bull run was $1,000. Now, I am conservative. I am not going to give you moon boy math. I am not going to tell you we're going to go to Mars, but $1,000 for BNB is on the cards sooner rather than later. I do think we're going to retrace. I do think we're going to pause, but they fundamentally changed the tokenomics of BNB by introducing this 30, 60, 90, 120-day staking. That's just drained all of the liquidity, all of the supply, out of BNB. And what does that mean? Price go up. What do I tell you about Bitcoin? Drain the Bitcoin from exchanges, price go up. You're seeing it in real time with BNB right there. That's what draining exchanges of BNB will do to the price. It will make it go through the roof. So keep an eye on that. And look at Solana. Again, I keep telling you, $174 is the key for Solana. We are sitting at $174. We are sitting at $71,000 for Bitcoin. We are primed. Yesterday or the day before, I said, can you feel it? And what happened? We moved up $2,000 on Bitcoin. Is this the last dance? Have the bears finally gone into hibernation? It's too hot for them. They get too hot in the sunshine. All the rivers have dried up because of global warming. Are they just going to go and disappear off into a cave? Let the bulls have their way for a couple of months. And could we be seeing $80,000, $90,000 Bitcoin before the end of the year? Who knows? Right, let's have a look at the 24-hour gainers and losers. Stacks is up. We're going to cover that today. Mantle is up. I do believe Peter, who's a watcher or viewer of the show, I think he's in Mantle. I think DYDX is up a touch. Book of Meme is up just a little bit, and Pyth is up. I made a video yesterday, by the way. My top 3 Solana picks for the bull run, and there is a 4th one in there. I've made a video about it. There is a problem with the algorithm at the minute, and the videos are not being picked up. We've had a string of videos that just people aren't being notified of them, but I've made a really good video. I'm really happy with the video, and I'm going to tell you what those coins are so you don't have to go and watch it if you don't know where it is. My 4 Solana picks for this bull run don't include meme coins. They are Pyth, Dupe, KMNO, Camino Finance, and my surprise, which is the risky one, is Zeus, because Zeus is it's using the SVM, the Solana virtual machine, to connect Solana directly to Bitcoin. It's a very ambitious project. I say in my video that I'm not going to touch Zeus until I see it working, and that means waiting 3 or 4 months. They're my 4 picks for Solana. I've not included a lot of the staking, liquid staking projects. I've not included any meme coins in that, because meme coins are getting all of the attention, and I don't care about that. Good morning, Danny. Good morning, Fran, Solo Sky. I hope you are doing well. So plenty of gainers and not so many losers today. Dog, which is this new meme coin that's doing the rounds. I haven't covered Dog simply because there are too many dogs. in meme coins, and there's plenty. There's too many cats. We need a new animal. I'm fed up of looking at dog memes. I want to see something like alien memes. I want to see, you know, we've got celebrity memes. We've got Mother, of course. Mother is absolutely tearing to the upside. I didn't cover Mother. I have to be careful I don't become Meme Coin Mike. I don't want that term. Meme Coin Mike, it has a nice ring to it, but who wants to be called Meme Coin Mike? Maybe I'll create an alter ego and make videos in a disguise so people don't know who I am and call myself Meme Coin Mike, because there's too many of them. I believe there was 500,000 tokens created on Solana in the last month or so. It's ridiculous. Good morning, Tariq. Welcome back to the stream. I do apologize to Tariq. I leave him 3-minute long voicemail messages on Telegram. I apologize. I must take up half of his day. Floki is down a bit, Court is down, Beam is down, Bonk is down, but nothing really is down too much. And there is not. Remember, there is no way. There is not a chance. It has not got a clue. This coin is a race to zero. Not coin is a gaming token that it cannot hold its value. And it's there on hype. Toncoin is overvalued. The entire thing looks to me like it's either got money coming in from another country with a red flag, or it's overhyped. I don't believe the metrics of the project. I don't care how many people are using it. I don't believe it. Now then, let's move on to some X-Files. Why not? Remember, any questions you've got in chat, let me know. We do have a topic of the day. The topic of the day today is very simple. Which will have a better return by the end of the bull run? The three options are Solana, Ethereum, or meme coins. Which would you hold from now until potentially October, November next year? Solana, ETH, or meme coins? I'm not going to tell you which one's winning, because that would affect the voting. So which one? I'll give you the answer at the end. Now then, we've got lots to get through, and I am procrastinating more than normal. So let's get into it. So 6 billion financial services company Unchained releases new Bitcoin commercial. Sleep soundly on a Bitcoin standard. Why is that so key? Because it is referring to the gold standard, which the American dollar, the UK pound, and many other currencies were on up until, I don't know what it was, 60 years ago. What happened when we left the gold standard? Inflation went through the roof, devalued all the money in your pocket, governments could print money until they had enough of it, and then they kept on printing even more. And that's why we are seeing people getting poorer and poorer, because we don't have the gold standard. In olden times, they would have to buy and hold the gold to use as collateral against the money they were printing, and they don't do that anymore. So it's an absolute shocker. Now I'm going to go and close down some of my windows that are open. I'm going to go close that down. You'll see what's happening tomorrow anyway. Right then, so let's move on very quickly. Okay, this is actually quite important. No more joking now. Yesterday morning, I received an email from an exchange that I have my Ethereum staked on. It's been there for 3 or 4 years. It was a legitimate email. It was perfect. It had everything. It came from their email address as well, telling me that I was going to get some exchange tokens in return for holding my assets on their platform. It nearly fooled me. I've been in crypto 8 years. I've been in the internet since probably 1996. That's a hell of a long time. 28 years. And it takes a lot to get scammed past me. And this is really important. If there's one thing you take away from this show, it is this comment. An email containing a phishing link. It's not, ignore CT token, that's irrelevant. There are emails going out from CoinGecko, from other platforms, and they are the templates used by those platforms, and they're addressing you as you are a member of that platform, and the links take you to a page which is identical to the exchange. So please don't click any email you get from anybody. If you get an email from your exchange saying you have won 500 tokens, or you've been given 500 tokens or airdrop tokens, don't click. Go to the exchange that you're on now, log in, and if it's a legitimate airdrop or a legitimate link, you will be able to find it through that platform. This hasn't just affected CoinGecko and Gecko Terminal. This has affected exchanges I can't mention the names of. So please, these links are becoming more and more official looking. Secondly, if you have your money on a hot wallet, such as MetaMask or Phantom, and you have all of your money there, I'm sorry to say this, but you are a fool. You should have the majority of your funds, because most of you listening are retail, most of you are not crypto degens or crypto experts. You shouldn't have your money in a hot wallet. It should be on the exchange that you're listening to now. So if you're listening to this and you've got 5 ETH in MetaMask, transfer it to the exchange you're on now. When you do that, go to your exchange, put 2-factor authentication on, put anti-phishing codes on, put mobile phone code, SMS codes on, and leave it there. That exchange you're on now has lived through the most brutal bear market crypto has ever seen, and it is still going, and it's stronger for living through it. People telling you that having your funds on exchanges, not your keys, not your crypto, that's great if you're an expert, Mr. Sunshine, but if you're retail and you don't know, if you barely know how to use the internet, you certainly shouldn't be going anywhere near MetaMask unless you want to go and play with meme coins on Uniswap or Jupiter Fine, but that should be a small allocation. It's all well and good being holier than thou until you lose all of your money by clicking on one of these links and then your wallet is drained. And then you sit there and you go into Discord or you contact your exchange support and you say, I've lost all my money, I don't know how I've done it. You've done it because you clicked on one of these links and they've drained your wallet. So make sure you take your funds, the majority of your funds, and you lock them up. You keep them safe. If you are very good, I'm sure some of you are very good and very IT literate, you should have a Ledger or a Trezor, but you should also be using the exchange you're on for liquidity purposes. Now then, this was going to be the title of the show today, but it didn't fit in the little white box at the bottom of the screen. Anatoly Yakovenko, co-founder of Solana, praises Vitalik Buterin as awesome and a role model for the industry. Now, with regards to this, I don't agree with this at all. I don't agree with this at all. I think Vitalik has steered away from controversy. I think he has steered away from the limelight. There are other people, obviously Michael Saylor is on the TV every other day. Vitalik shies away from that. So in that respect, yes. Is Vitalik a role model for the industry? No, because he's naive. Vitalik is naive. Vitalik is a high-functioning programmer, a high-functioning intellectual. He should not be in charge of a multi-billion pound organization. He is exceptional, probably one of the brightest people in crypto, Vitalik, but he doesn't have the acumen to run a business, in my opinion. Anatoly Yakovenko isn't as bright as Vitalik, but he's switched on. He knows how to run a business. Ethereum started way before Solana, and Anatoly has taken Solana past Ethereum in 4 years in many, many, many different ways. I don't care about it going down. I don't care about the hours it goes down a year. I mean, I don't care. Your electricity supply goes off more often than Solana goes down. I don't care. It's not an argument for me. But I don't agree with this. I do agree from the outside looking in that Vitalik can be seen as a role model for the industry, but no, he's not. There are far better. CZ, in my opinion, CZ is one of the best people, and crypto is lucky to have CZ. And that's not blowing smoke up his backside. It's because of the way he conducts himself. And I follow him and I've monitored him, and he has taken one for the team by what's going on right now. Kabir is back. Good morning and welcome back, Kabir. He has been traveling. He's now in the US. He's there for 2 months. Well, Kabir, I don't want to know what you do for a living, but it sounds clandestine. Are you a spy for the UK government? That's what I need to know. There are issues with exchanges being blocked in certain countries. MetaMask allows to be used in almost all countries. I take the point on board. I totally agree with you. However, the issue is that you are open to attack. If you are in a country where you can't use an exchange, go and get yourself a ledger and use MetaMask to move your money on and off your ledger. If you want to stake, and I was going to do that today, I haven't got enough time, I will do it tomorrow maybe, you will be able to stake from your ledger. So if you're in a country that doesn't have an exchange, you can stake directly from your ledger and generate a yield that way, but there's no reason you can't get a ledger. And if you do get one, make sure you buy it from the official website and not Amazon. So Bitcoin, this again was another one of the headlines of the day. Bitcoin miner holdings have plunged 50%, reaching their lowest level in 14 years. Miners have sold off. Why? Because when the halving happens, there's a very strange set of subsequential events that happen. The rewards that miners received are halved. They were getting 900 Bitcoin a day collectively. Now they're getting 450. The price of Bitcoin has to move up to another level so they can become profitable again. Some miners right now are not profitable. So what do? They either sell their supply or they turn themselves off and they wait for the price to get to a certain level that makes it profitable. Each one has a different price. Some it was 45,000, 50,000, whatever it might be. Can wallets hold all tokens? MetaMask can hold most. Ledgers can hold, I don't know, last count, was it 1,000? If you're dealing in meme coins, leave them on MetaMask or leave them on Phantom, fine. And if you do make a lot of money out of them, sell to stables, send to an exchange, or send it to MetaMask. The word of warning, by the way, if you are in a place where you can't access an exchange, it's probably not advisable to hold your funds in USDC or USDT because they can be frozen centrally. So if you do make a lot of money out of meme coins or a lot of money out of crypto, you should use Bitcoin as your base currency, not the US dollar. That's just a word of warning because that can happen in the future. But anyway, Bitcoin miners, their holding has plunged. They basically sold off to keep the markets, to keep themselves going until the market picks up. Now then, let us move on to news about Franklin Templeton. We are going to get through the show today. We are running incredibly late. So Franklin Templeton CEO says Bitcoin investment still in an early phase. CEO Jenny Johnson believes institutions will deploy a second wave into Bitcoin funds and attract big players. I totally agree. So she believes we're in the early days of Bitcoin and the big institutional money has not been deployed. I don't even think we've even scratched the tip of the iceberg with institutional money. We certainly haven't. What would I consider to be full deployment? I would say probably about 5% of all company treasuries deployed into Bitcoin. I would say maybe 3% of all funds in Bitcoin. I think at that point we will have fully moved into traditional finance. So we're a long way from that. I'm picking out companies which are investing into Bitcoin. We talked about the state, was it Milwaukee or somewhere, Wisconsin, put $160 million into Bitcoin. They're going to be putting more in. That's one state out of 50 odd. So if all of them did it, you'd be looking at 8 billion coming into Bitcoin. So there's a lot of that going on. This is really the first wave of the early adopters, and I think next wave is much bigger institutions. Just give me 1 second. Let me pause the stream for 1 second. The Oracle has entered the room. And we are back in the room. Right then. This is really the first wave of early adopters, and I think the next wave is the much bigger institutions. I totally agree. The CEO noted that institutional interest will continue to grow as previously apprehensive investors and fund managers become more comfortable with handling digital assets and their underlying tech. I totally agree. She's right. JJ, we're going to call her from now on. JJ is absolutely spot on. Now we're going to have a very quick look at the Bitcoin chart, because all of these, Tariq felt the disturbance in the force. This is the problem, Tariq. The Oracle walks into the room and various objects in the room, like the coffee cup, the TV remote, mobile phones, they all start to levitate. It's like, you remember in E.T. when E.T.'s in the little kid's bedroom and it just waves its fingers around and everything starts to float? That's what happens when the Oracle walks into the room. Just give me 1 second. I'm going to have to go again. 1 minute. The Oracle is not able to sort this problem out. Right. But he's gone now. Right, okay. We're back. So, the Bitcoin chart, where are we? Well, we know all about these lines because we've had these lines on our screens now for weeks. We came down, we swept down here at the end of May, and now we're going up. So, is this Bitcoin's last dance? And this is the news that I was going to tell you at the start of the show, but I was just trying to keep you on tenterhooks. Several exchanges have added China as an option on their sign-up page. Now, we mentioned this. I said there was whispers on the streets. The back streets of Twitter were talking about China moving back into crypto. And there we have it. I think there is going to be some kind of China acceptance of certain exchanges over the course of the next 3 to 6 months. This is going to bring what, the second largest economy in the world, is it now, behind America, back to crypto. And they will probably do it in a very strict way. And what I mean by that is they will probably have a limited number of tokens they will be allowed to offer, maybe Bitcoin, maybe Ethereum. They will only allow certain ways to on and off ramp. And again, China is entitled to do what it wants. But what would that do to the price of Bitcoin? Well, first of all, we would never be talking about a 5-figure Bitcoin ever again. We would be talking about a very decent 6-figure sum for Bitcoin. If you think that the Chinese market is potentially going to bring anywhere between 100 and 200 billion into Bitcoin, and don't think there isn't already Hong Kong-based companies dealing in ETFs. We know about that. But this would be the next catalyst. The Ethereum ETF, of course, is a catalyst. The American, the election is going to be another catalyst. The change of Gary Gensler, these are all smaller catalysts. But China finally onboarding crypto. Tell the Oracle to bring me coffee. I've got coffee, believe it or not, and it's very nice coffee today. It's a bit strong though. I can feel the energy flowing through my veins as we speak. So a little bit more aerated than I was yesterday. I wasn't my full self. So what are we going to do then with Bitcoin? Where are we going to go? Well, I think this is a pause. I think we're at a pause stage. And if you remember what I said at the start of the week, I said that Bitcoin has spent so long down here that we are due a rip. And we did. And what did we do? We broke 71.3 and now we're sitting just under 70,000. 71,000. 71,000 is psychological. We know that. I do think that we are going to do this. This is the next move, in my opinion, for Bitcoin. Not necessarily in a straight line, but if you look at these, do these not look suspiciously similar? Now, do they not look? I'm not saying they're pre-planned. I'm not got my tinfoil hat on today. If you want the tinfoil hat, you'll have to join on. We'll do a Rumble stream one day. That would take us to 73,000 and maybe a bit more. So they look like waves of investment. They look like inflows of cash over periods of time. It looks as if people are buying hundreds of millions of dollars a week, and it just looks like it's a wave that's coming. So we could see this next wave taking us to 73,000. We have cooled off. If you look, we have cooled off. We also cooled off here. So if we see another move up, we are likely to see another. That's actually not a bad drawing for me. That we could see another cool off period up there. That's what I think is going to happen. I don't have a crystal ball. This isn't financial advice, but take it as it is. Tell the Oracle to bring me coffee. Love coffee. I love coffee. Oracle Brogan drinks energy drinks. That's where the powerful energy forces come from. He does, but we've switched. We have switched from energy drinks. They are no longer. They no longer power Crypto Warehouse. We have switched to raw energy drinks, and raw energy, believe it or not, doesn't have any of these horrible chemicals and things in them. Raw energy is more fruit-based, natural caffeine and things like that. So we drink them, and we only drink them once a week on a Saturday when we're in the studio because we can't be bothered going out to buy them. Now then, all of Michael Saylor's Ethereum predictions were wrong. Now, again, I am not going to gloat at this, but I do find it funny because Michael Saylor is, of course, a Bitcoin maxi. What do you think the odds are on Michael Saylor buying Ethereum ETF, or sorry, not Ethereum ETF, Ethereum, now he knows it's going to get Ethereum? I'd say before the ETF news, we had a 100% chance that Michael Saylor was just going to hold Bitcoin. I think we've now got a 10% chance that Mr. Michael Saylor is going to buy into Ethereum. And I think this is going to be the greatest U-turn from one man. And I'm not going to say Joe, but I can't say his name. I think we can't mention people's names on the channel because the algorithm picks them up. And again, I sound like a conspiracy theory. I'm just trying to be honest. I think we'll call him Sleepy. This is the greatest U-turn since Sleepy turned and walked away from the podium mid-speech. Right then, his predictions were wrong. He did say, I remember, that Ethereum wasn't going to get an ETF. Didn't he just? He predicted that the SEC would classify Ethereum as an unregistered security, which it hasn't. Sometime this summer, it will become very clear that Ethereum is deemed a crypto asset security, not a commodity. Wrong. He predicted that the US stock market would never list a spot Ethereum ETF. Wrong. He claimed spot Bitcoin ETFs would be the first and last type of spot cryptocurrency ETF. Wrong. Absolutely wrong on every count. However, do I blame him? No. Why? Because what is Michael Saylor's job? Michael Saylor's job is to buy as much Bitcoin as possible, get the price as high as possible, and add the most value to him. Do you all remember what I told you what Michael Saylor's long game was? Does everybody remember that? And if you are new here, remember, smash the like button, say hello, give us a wave in chat. Michael Saylor's long game is Bitcoin is digital land in his eyes. He's going to build a hotel or an office block, whatever you want to call it, on his Bitcoin land. He is going to allow financial institutions to use his hotel, his office block, as liquidity. He is going to create a liquidity pool for financial institutions to use him. And he will, think of it this way, okay? How do you make money out of Bitcoin? Michael Saylor is buying all the Bitcoin. He's got into the cake shop. He's buying all the cakes. He's buying as many cakes as he can. They're under his arms, they're in his pockets, they're down his socks, they're down the back of his neck. He's walking out of the shop with all the cakes. How does he pay for the cakes? He writes IOUs to people. I'll pay for the cakes tomorrow. I'll pay for the cakes next week, next year, okay? He's got a house full of cakes. What's he going to do with them all? He can't sell them. It's against his ethos. So if you don't sell your Bitcoin, what do you do with your Bitcoin? You earn from your Bitcoin. But Bitcoin doesn't have proof of stake. Bitcoin is proof of work. You allow financial institutions, and we're not talking about Tom and Harry's bank down the high street in Burnley. We're talking about BlackRock, Fidelity, Goldman Sachs, Barclays, HSBC, Santander. You name any bank who doesn't have access to the Bitcoin that needs liquidity, deep liquidity, in an asset that appreciates in value. So those companies, banks will use that Bitcoin as collateral to then generate themselves a yield. Maybe they will borrow against the Ethereum that he gives them. Maybe they will use it for trade. Maybe he will become a clearinghouse. Maybe it will be very similar to what's that mechanism called, where you put the money in one end and somebody puts the asset in the other end and then you exchange them. Anyway, there's multiple ways for him to make money out of his Bitcoin. But think of it, nobody talks about this. All he's doing is buying Bitcoin with debt. When does he get to pay it back? How do these people get repaid? Why are people giving him hundreds of millions of dollars to buy Bitcoin? Think about it. It's like, in one respect, and I'm not going to say the word, but it's like a gambler. He's just buying and buying and buying, or betting and betting and betting, and people just keep giving him money. So where do they think he's going to get the return from? And that is, he's going to become a liquidity pool, a Bitcoin liquidity pool, and that's what's going to happen. So he's a very clever man, but nobody sits down and ever asks him that question: how are you affording to buy all this Bitcoin, and what do you intend to do with it? Because his answer, whenever he's asked, are you ever going to sell any Bitcoin? Never. So if you're never going to sell it, what is the point of holding it? It's like he's got a room full of gold. And what does he do with the gold? Nothing, it just sits there. So be very careful about just blindly believing people. Think about the motivations behind why they say it. And that's why I haven't got a problem with him saying what he said about the Ethereum ETFs, because he wants people to be all in on Bitcoin. Ethereum is a threat to him and what he's trying to do, remember. Because if Ethereum becomes an ETF, there is a scarce supply of Ethereum as well. I know it has an infinite supply, but it's deflationary, and I'm sure Vitalik, the great man himself, is going to come up with a solution to maybe cap it. Who knows? But be careful. Now, Gary Gensler. I ran a poll on what meme coin we would call Gary Gensler, and it came back as Lizard. So Gary the Lizard has weighed in on approving more token ETFs. And we like Gary. Gary's on it, but you've got to remember, this is his farewell tour. This could be the title of the show today, The Last Dance. This is Gary Gensler's last dance. Why? Because in March next year, he's going to be out of a job. However, in April next year, he's going to be working for BlackRock. And if you don't believe me, come back in April next year and we'll have a conversation about it. I guarantee you, Gary Gensler is going to do the hardest switch from anti-crypto to pro-crypto the world has ever seen. He's going to go from it's a security to it's life-changing wealth. You need to buy Bitcoin and Ethereum. You need to buy all of these cryptos. He's probably going to have his own meme coin. Watch it happen. April, May next year, Give it a couple of months after he's been after he steps down from the SEC. Watch what happens. He will be at BlackRock, maybe Goldman Sachs as well. Goldman Sachs is a blue chip bank as well. So he was on CNBC's Squawk on the Street about a possible approval of others. I think they asked him about a meme coin as well. Jim Cramer, one of the show's hosts, highlighted how multiple tokens registered millions in trading volume this very morning and questioned if the US shouldn't have some sort of products to capture the volume. Let me say something more broadly. I'm not going to put the accent on today. That's enough accents for today. Let me say something more broadly about crypto markets right now without prejudging anyone. These tokens, whether the ones Jim listed or other tokens, have not given you the disclosures that not only do you need to make your investment decisions, but also required by law. So he hasn't called them securities, has he? And these exchanges, Jim, are doing things we would never allow this New York Stock Exchange to do. Our laws don't allow you to trade against your customers. So again, backhanded slap to exchanges. Again, it's a low blow. The problem with the SEC under Gary Gensler is they are low blows. They've been fined in courts for being immoral. They have tried every dirty trick in the book. It's disgraceful behavior. Absolutely disgraceful behavior. They are accusing crypto exchanges from trading against their customers. That's what they're saying here. And that is slanderous and shouldn't be allowed. And I can't say any more on it. Further, Gary mentions bankruptcy cases in crypto. There's hardly many. You have banks going out of business more than crypto companies. Some of the leading lights in the field are either in jail or about to go to jail or awaiting extradition. It's a suboptimal situation for investors. You're investing in a field right now that you are not getting the proper disclosure, concludes Gensler on the next crypto ETF. I tell you what, he hasn't called them securities, but he's still getting the digs in. It's like you're in the office, you're in front of the headmaster, and you're both being told off, and he's just digging you in the ribs from behind. He's still at it. He won't stop. Anyway, right, let's move on very quickly. Stacks price soars amid spike in DeFi activity on Bitcoin Layer 2. Now, remember what I said at the start of the show. I think that one of my big coins to follow is going to be Zeus Network, which is on Solana. It's going to connect Solana to Bitcoin. Remember what we say at the start of every show, 52% of all of crypto is in Bitcoin. 52%, half. Does it generate yield? Nope. Can you stake it? No. What can you do with it? Not a lot. So, you're left with riskier decisions to make. Do you wrap your Bitcoin, move it onto another chain and earn yield on it that way? That's one option, but the yields are negligible, less than 1%. So Bitcoin is this huge untapped market, huge untapped opportunity. And going back to what I was saying before about Michael Saylor, there is probably going to be an opportunity in the future where Michael Saylor turns around and says, if you have your Bitcoin, you will be able to stake it with me at my Hotel California. That's what he's going to say. Come and let me earn you your yield from these massive financial institutions, and I will give you 2 or 3% on your Bitcoin. Now, when we get to that stage and Bitcoin is at maybe $1 million, that would be generating you $20,000, $30,000 a year per Bitcoin. That's an opportunity. So have a look at that. Have a think about that, because there is an opportunity there in the future. Now, do I trust Layer 2s on Bitcoin? At the moment, no, I don't, because I've not done enough research. I need to do more research. My issue is anything that's a Layer 2, anything that's a wrapped Bitcoin, you're moving your asset off its native chain. And that's the problem, because then you are opening it up to vulnerabilities. And we need to see whether Stacks or the other one that I've mentioned a few months ago, which is working on a DeFi platform, or Zeus is going to be the key. That's the problem that I have right now, because wormholes and contracts can have vulnerabilities, And Bitcoin is the one that people want to hack. They want to get your Bitcoin off you. So we'll have a look at this. Kabir has said, all exchanges trade against their customers, the house versus the gambler. They have money makers. They have money makers. They don't do it themselves. If they did, it would be illegal. But I know what you mean. On new coins, the coin itself provides the liquidity and provides that amount to the exchange. The exchanges themselves, several years ago, did have in-house teams of traders, and it was outlawed. It was outlawed maybe even 4 or 5 years ago. So if it is going on, it's against the law, and I don't think they're doing it anymore. But they do have money makers. They do have whales that use those exchanges, and they do incentivize them. But that isn't strictly the exchange, and it isn't strictly against the law, unless they're doing something underhand, of course. But I don't believe exchanges do that at all. I don't think that. I think they may have done 6 or 7 years ago. If you've got an exchange with no volume, then you've got a problem. If you've got an exchange that has a whale on it, and that whale has $200 million, and you give him 0 transaction fees, he's going to pump your volume. That's what it's there for. And I don't think they do it as much anymore. Anyway, Stacks price soars amid spike in DeFi activity on Bitcoin Layer 2. Why does that look like a Christmas advert at the top of the screen? I don't even want to know what Rebel Satoshi is. I imagine it's some kind of scam. So Stacks is up to 237. I did tell you about Stacks a few weeks ago. I did tell you it was going to move with Bitcoin, but I can't hold every token. Stacks is currently sitting top ahead of Floki, Audi, and Kronos. It's up 14%. Stacks price gains against Bitcoin as it surges to 71,000. Remember, we talked about Michel van der Popp, or Michael van der Popp. What was he doing? He was buying layer 2s on Ethereum because he expects Ethereum to rip. He's trying to outperform Bitcoin. If you want to outperform Bitcoin and stay within Bitcoin, then you want to be looking at Stacks. That's a simple matter of fact. Anything Bitcoin related is going to pump slightly better than Bitcoin. So you want to be looking at, is it Audi? You want to be looking at Stacks. You want to be looking at anything else Bitcoin related. So Stacks gains amid spike in DeFi activity. It's a layer 2 project. As a leading layer 2 for Bitcoin, Stacks has experienced decent traction with key projects. Now, there is something I want to show you. So Stacks, we're looking at Stacks, a layer 2. Okay. Now, I covered this. I've clicked on the wrong flipping link again. There's 2 Zeus networks. It doesn't help matters. Now, this is what I want to show you. So we don't look at that Zeus. We want to look at this Zeus. I have to get to it through here. There are no coincidences in the world. We know this, don't we? There's no coincidences that certain things happen at certain times. So, just to reiterate, we are talking about Stacks ripping a layer 2 on Bitcoin. Now, this is Zeus. Zeus, the token, is on the exchange you're on. It's tradable. This isn't a pre-sale or anything like that. Now, look at who the angel investors are for Zeus, which is going to connect to Solana to Bitcoin. Muneeb Ali. Can you see that right in the center of the stage? Can you see who he's the co-founder of? He's the co-founder of Stacks. Isn't the world a small place? Now, what would your strategy be if you were Stacks? My strategy would be to take my layer 2 that sits on Bitcoin, which is trusted, has all the apps built on it. I would want to connect in to the major layer 1s, which are Ethereum and Solana. So, Zeus has been invested in by Stacks. So in the future, what are we likely to see? Well, in my opinion, we would see a Stacks dApp on Zeus. Now, Apollo is what's been built by Zeus. So the Apollo app is what connects you to it. So Apollo, there we go. So Apollo's the first DeFi project. We're not going to connect to it. It's not live. But you've got to ask yourself, how closely aligned are Stacks and Zeus going to be? I think they're going to be incredibly aligned. So this is why I've picked Zeus as one of my picks for the bull run. They are connected to Anatoly, the co-founder of Solana. They are connected to Stacks. So if you want to get into Bitcoin-related projects, if you want to have a Bitcoin portfolio that's made up of different Bitcoin projects, Stacks would certainly be one of them. Zeus, in my opinion, would fit into that category as well. So make sure to go and check out Stacks. Now, I do have the chart here for Stacks because you want to know what the price is going to be. You want to know how good this project is going to be. Remember, say hello in chat. Let me know you're there. And also let me know if you completely agree or disagree with me. As you can see, I will read out any comments. If Kabir disagrees with me, I will read out his comments. I'm not one of these streamers who will ban you or block you if you say something I don't agree with, because that is not free speech. And I am one to believe in free speech. So this is the Stacks chart. I've no idea why nothing is... I don't know why nothing has been put on here. Okay. We've not looked at Stacks for a while. Since November last year was the last time I think we looked at it. So let's drag this all the way across here. There we go. So where are we looking for Stacks? Well, we moved up. This would have been probably post-halving, pre-halving, hype. It's fallen down. It's found a great level of support here, which is at about $2. Previously, that was at resistance. It's now at support. We are at $2.37. Remember, when you read these articles, you think, oh my God, it's pumped. I'm never going to catch it again. It's gone. I've lost it. I've missed out on my chance to buy Stacks. Well, not really, because this is pre-bull run. This is pre-ETF, pre-halving. This is pre-halving, and this is post-halving, and most coins have done this. So the coin reached $3.60. So 50% opportunity here to move up back to those prices. If you think Bitcoin is going to rip to the upside, then this is going to go with it. Bitcoin isn't going to rip up 50%. So if you put $1,000 into Bitcoin today and it moves up to $80,000, you've made 15%. If you put $1,000 into Stacks, which is a Bitcoin layer 2, it could potentially go up 30, 40, 50%. Smaller market cap, people want to buy into Bitcoin related projects. This isn't a bad buy. But when somebody tells you it's ripped up, you need to zoom out. You need to zoom out and look at what's happened. And I don't mean look at what's happened back here when it's first started out. You know, we're back here, and what were we at? 280, 320 we got to. We put in an all-time high this year. So don't need to look that far back. Look at what's happened recently. And even though we're up, we aren't up to April's levels. So, you know, we are 2 months down the expect Stacks to do something like that and maybe come up towards this level here at 440. But remember, this is going to go with Bitcoin. So if Bitcoin retraces today and goes back to 69,000, the chances are we are likely to retrace back towards this $2 range. And that would be a good price to maybe get it at. You bought Stacks at 62 cents. Do you know what? That is a cracking price to buy Stacks. That is a very good price to get in at Stacks. What are we at now too? So you've made a 4x off Stacks. But listen, Stacks, much as I'm going to go back to it again. Michael van der Popp sold his Bitcoin and bought 3 layer 2s associated with Ethereum because he expects those to outperform Ethereum and he expects Ethereum to outperform Bitcoin. He is not looking for a US dollar monetary gain. He is looking for a Bitcoin monetary gain. He counts his assets in sats, not cents. Okay? So he wants to outrun Bitcoin and then buy back into Bitcoin. That's what he's trying to do. So Bitcoin is a train going 40 kilometers an hour. Ethereum is probably going to go 50 kilometers an hour. He expects the layer 2s to go 70 kilometers an hour. So he's hopped onto those layer 2s. At some point in the future, when they are miles ahead of Bitcoin, he is going to jump off the track and wait for the Bitcoin train to catch up. And that's when he's going to load up. And that's not a bad strategy. Lots of people called him crazy. I probably thought it was a bit odd to do that at the time, especially pre-pump. The idea really is you can sell out of Bitcoin near the top, then buy back into your alts. But I think he's trying to front run the entire game. Maybe he thinks all-time highs are going to be January or April rather than October next year. That's his decision. And I think it's a wise one. I think if he started this journey with 10 Bitcoin, by the end of it, he is more than likely going to have 18 to 22 Bitcoin by the end of this. I think he's going to do that well. So for me, if you want to get into layer 2s on Bitcoin, they are still very early and they are still way behind in terms of adoption because Bitcoin is a proof of work chain, not proof of stake. Now, let's move on very quickly. We've talked about stacks. Now, we've got a couple of things to talk about. USDL is pretty exciting. So don't go anywhere if you want to know about USDL. If you've never heard about USDL, I hadn't heard about it until yesterday. So maybe holding on to tokens, just sitting in the exchange and you don't know what to do with them. The exchange that you're on has native staking on that platform. You've also got on MetaMask, you can stake from MetaMask, you can stake natively there, or you can use earn programs. There's loads of ways to earn money. Earn programs have problems with Flash crashes and things like that, which we're not going to get into on here. So amid the ongoing bull run, CryptoHeap, a staking platform, has introduced a blueprint to maximize your success. This initiative seeks to leverage current market conditions to offer users a comprehensive framework for staking. So, the cryptocurrency landscape is rapidly evolving, particularly during a bull run. Our strategic blueprint is crafted to guide our users to not only navigate this volatility, but to thrive. Now, my strategy is simple. If I am buying into a token, so I bought Near Protocol, $5.80 to $6, I think I got that. What did I do with my Near Protocol? I staked it, and I'm getting 9.3%. I think that's the current yield, 9.2%. Because I'm not going to sell it for a while. So if I hold it for a year, I'll make 10%, but I won't. What you have to understand about staking is not about earning a yield. It's about holding the value of your tokens. If you know that a chain has 10% emissions per year, so year 1, it has 1 million tokens. In year 2, it has 1,100,000 tokens. If you just sit there with your tokens and you don't stake them, your tokens in effect have potentially 10% more circulating supply, so yours has 10% less value. That's how inflation works. That's how money printing works. So the idea is you're not staking to earn a yield, you're staking to hold the value of your portfolio. So if you invest $1,000 in year 1 and nothing changes in terms of massive price spikes, you should have roughly $1,000 worth of your tokens in year 2. That's how it should work. Now, we're not going to go through some of these adverts. Hang on one second. I'm trying to avoid putting exchanges on the stream. We're ramping up our community forums, webinars, support systems to ensure our users feel supported every step of the way. In preparation for the increased activity and demand, CryptoHeap has upgraded its infrastructure. So we're going to have a go and have a look at CryptoHeap in another video. But the point of the matter is that this isn't a bad idea. If you've got Ethereum, staking it natively is going to make you 2.5%. If you have Solana, it will make you 7%. So if you hold your assets and you're not staking them, and you're not planning to sell them until maybe October next year or April, May next year, that's a year away. Consider staking your tokens on chain, and you will then be able to earn a passive income, a passive reward. ADA has a massive amount of its tokens staked. Solana, not so much. Ethereum, massively, especially if you look at Lido. You can also stake your tokens and get a liquid staking token in return. And you can then restake that to earn additional yield. It gets a bit complicated, but to keep it simple, if you have native staking assets, you can earn from them. And I think I've earned half a near token already, and it's only been staked for a couple of weeks. So anyway, have a look at that. Now then, very quickly, Solana. We're going to have a look at Solana. We're still at these ranges which we said we would be at. And again, we are not, we don't predict the future, but we are showing you where we think we're going to go. And that is that beautiful bottom. We followed the beautiful bottom pretty much to the tip there. We could come back down to test this line at 164, but I do think it's time that some of our coins start to move up, and we do start to see some movements. We've had some good signals on here. We've bounced off the bull market support band. We broke through. We came up to about 180. We've been struggling at this 174 range. That 174 range we've been talking about for months, and the one after 174 is of course this big one up here, which is about 201, 202. That's the next move for Solana. Longer term, where is Solana going to go? I do think there's going to be a $1,000 Solana in the future. Grayscale Solana Trust is looking at $450 to $500. That's probably where we could get to this year. That's still a 3x. In the bull run, we could break $1,000. If we get the Solana ETF next year, then we are looking a lot higher. $1,500, $2,000. They are big numbers. I wouldn't go anywhere near those numbers if we weren't getting a Solana ETF. But the big boys want everything. They want Bitcoin because it's the biggest asset. They want Ethereum because it's TradFi's chain of choice. They want Solana because it's retail's chain of choice. So if you have Bitcoin, which is of course store of value, and you have those two others, you are going to end up getting 80% of the market. And that's, I think, where they want to go to. The XRP one, the Litecoin one, maybe they come in the future, but for me, Solana is the next one. The second the Ethereum ETF goes live, Solana is going to rip, because people are going to sell the news. That's right, yeah, sell the news. So I think that's what's going to happen with Solana. But next for me is to break 174. If we don't break 174, back down to 165 we will go. And now we are on to the last article. Have we managed to do this in nearly an hour? We're an hour and 2 minutes into the show. We're a little bit over, but you know what? We've covered a massive amount of information today, massive amount of news, and hopefully you have found some of it interesting. Let me get to the article. Now let's hope this article hasn't been deleted. There we go, perfect. Oh, I have opened it. Oh, hang on. 1 second. That was a terrible move. Let's make sure. Okay, we're back now. Right, let's try that again. So Paxos. Paxos you will probably have heard of because they issue various different tokens. One, of course, is Paxos Gold. If you want to hold Bitcoin, sorry, if you want to hold gold in a digital format, Paxos Gold exists. But they have launched Lift Dollar, a unique overnight yield generating stablecoin. Wow. The new Lift Dollar stablecoin launched by Paxos offers daily yield from US government securities. The USDL stablecoin is issued on Ethereum. Currently, the new stablecoin is accessible in the UAE, Europe, UK, and Japan. Why is this important and how does this work? Very simply, if you hold US Tether, US Circle, USDC, USDT, they take your real money and they go and invest it in treasuries and bonds in America, and they make billions out of it. And I mean billions. Tether is buying billions of dollars a year of Bitcoin with their profits. PayPal are trying to get into the action. We've already talked on previous shows about XRP trying to get their own stablecoin. Stablecoins are lucrative, but to you, you might think, how can it possibly generate any money? It's a dollar for a dollar. I give them my dollar, they give me a digital dollar. How do they make any money out of it? Well, they kind of lend it out in a way. They buy government bonds and they make 5%. Now, if you very quickly, and I don't want to overrun, but just to give you some concept of how much money they make. Tether has a market cap of 112 billion. If they're making 5%, they're making $5 billion a year. If we go down to USDC, which is smaller, they're making $1.6 billion a year out of your money. Okay? To put that into context, PayPal makes $800 million a year. So these two overnight successes are making double, in Circle's case, or 8 times, 9 times the amount of money in Tether's case. That is why stablecoins are so lucrative. Now, what Paxos is suggesting here is that you will be able to hold these assets and they will give you a proportion of the yield that Tether and Circle are making and keeping to themselves. So this is huge. And I mean it's huge. Because why would you sell your Bored Ape? Let's say you sell your Bored Ape for Ethereum and you cash out of Ethereum at $6,000 and you cash yourselves into USDT. You're just making them 5%. If you cash it into USDL, you're earning a yield for holding it in a stablecoin. This is massive news. This isn't an algorithmic stablecoin like some of the ones I've panned before. This is Paxos. This is a stablecoin. This approach shifts the interest earned from the stablecoin reserved assets directly from central issuer to appropriate end holders. Now, obviously, this isn't going to be live today. Paxos International will ensure USDL's issuance is permissionless on the Ethereum blockchain, promoting transparency and accessibility. Additionally, for the design of the USDL includes programmatic daily returns, likened to a savings product offering users a consistent and predictable yield, distinguishing it from other stablecoins. So it's launched it through the UAE branch, and it has compliance as you'd expect from Paxos. Paxos is a trusted brand. In addition, the backing of USDL is kept safe from potential bankruptcy situations, ensuring the value of the stablecoin remains robust and protected. Due to a lack of regulatory guidance in the US, again, the US is losing out here. It will not be available to American users. Instead, hit strategically targeted regions, including Europe, the UK, where the regulatory environments are more favourable. So Charles has said that this is structured similar to other stablecoins, such as PayPal USD, Pax Dollar USDP, and Pax Gold. All these stablecoins are matched. Pax Gold isn't a stablecoin. Actually, you know what? It is a stablecoin because it's paired with the price of gold. So yes, it is. All these stablecoins are matched one-to-one to the dollar and backed by short-term US government securities. With planned collaborations with exchanges and wallet service providers, Paxos aims to enhance the usage and accessibility of USDL. Now, this doesn't matter if it is paying you 2%. This doesn't matter if it is paying you 3%. What matters is you are earning passive income on your new coin. This is massive news. Why does the market cap of all stablecoins not equal to all other coins' market cap? That means there is a valuation problem in the crypto, says Kabir. It does, absolutely, but it doesn't quite work like that. If you took stablecoins out of the equation, you have different pairs. So you have Bitcoin and Ethereum pairs. If you took all the money in the world and compared it to all the money in stock exchanges, they wouldn't tally up either. So a valuation is based on perceived value, not on physical value. You also have leverage in place, which exists in stock markets as well. And leverage allows you to fictitiously have more of an asset than you do. So it doesn't work for traditional finance, and it equally doesn't work for crypto, because assets are going to go up in value over time, and assets move in value. Stablecoins don't. If you think about it, the way that the American government generates its money is it prints its dollar. And an interesting question for you is, if a government can print all the money it needs to pay its civil servants, pay for infrastructure, if a government can print the money it needs, why are you taxed? Think about that. Why are you taxed if a government can print all of the money? And the reason is, in my opinion, and again, this isn't a conspiracy theory, it's economics, they have to keep demand to a minimum because inflation eats away and everybody would be poor apart from the government. So it's a trick. It's a pony show. They tax you to the point where you can still buy things, but not enough so you buy too much of something so the price goes up. That's what they do. And that's to keep inflation down. The reason we have inflation is because they print money. Inflation and perceived value. There's a term, the value of something is not based necessarily on the inherent value. If you look at Bitcoin, for example, there is a fair value price of Bitcoin, and I think it's $35,000 or $40,000 now. That's the fair price of an asset. If you look at earnings ratios of companies, in America, everything's overvalued. So what that means is that for every $50 of effort and reward in a company, they generate $1. Look at Netflix, for example. Netflix is a multi-billion dollar company, and it generates about 5 cents per share, and the shares are $300. So there's perceived value, then there's potential value, then there's speculation, and all of those things change the values of companies. Look at Nvidia. Nvidia is trading more than the next 10 stocks on exchanges. It's incredible. And you know what's going to happen to Nvidia? It's going to implode. The price is going to absolutely wreck to the downside. GameStop is a perfect example as well. GameStop, the price of that company for a company that's nearly bankrupt is incredible. So the money in your pocket and the money in everybody's pockets never equates to the values on stock exchanges. And the way to look at it is, if there's 1,000 shares in a company and you buy one for £1, the company's valued at $1,000. If you sell me that share for $10, the company is valued at $10,000. If you sell that one share for $100, the company is valued at $100,000. And we can go on. You sell it for $1 million, the company's valued at $1 billion. Even if the 999 other shares are never sold, the price of that company is based on the order book of the value of those shares and what people are willing to sell for. Why is Bitcoin going to go to $1 million? Because there are enough people that will not sell until it's $1 million. Why will Bitcoin go to $80,000? Because the demand is there to buy it, but there aren't enough people to sell until we hit $80,000. It's a game of chicken at the end of the day. And unfortunately, the ETFs are winning because people have got paper hands and they're folding. What would happen if nobody sold Bitcoin? What would happen if there was no sellers? And the perceived value of Bitcoin was $500,000. If we had China coming in and the ETFs for Ethereum coming in and the new president coming in and Gary Gensler gone, it's like that meme of the lad sitting at the computer with just a startled expression on his face. It's going to wreck the price of Bitcoin to the upside because all of these things are going to happen. I'm not Rasputin. I don't predict the future, but you can see what's going to happen. The head of the SEC steps down because they are appointed by the president. That's going to happen. The ETF has already been approved. That's going to happen. Interest rates are going to come down. That's going to happen. Every single one of these is going to rip Bitcoin to the upside. But the price of Bitcoin is perceived value and trust in the value. How does a currency work? It used to be backed by gold. It isn't. Why was it backed by gold? Because gold was trusted. So underneath every single thing that you buy and sell is faith and trust. And that faith and trust comes from a belief that you're buying something that's going to hold its value or go up. And that is totally disconnected from the money in your pocket. And that is just how things work. Look at the way that banks give money. Gar got pumped every week. Disclose crypto. You know what? I'm going to bring up Gary while I'm talking, and I'm going to finish the show because it is 12:15. Just bear in mind that everything is smoke and mirrors, and the way that banks show assets on their books is appalling at the end of the day. It's absolutely appalling. The way they do things, the way they say how many assets they've got on their books. If nobody out there has heard of fractional reserves, it should scare you. Fractional reserves should scare you. Why? Because for every $1 you put into a bank, they have 3 cents. That's it. The rest of your money is gone. Banks don't give you your money back anymore. Why? Because they run on fractional reserves. And fractional reserves are absolutely the reason why we've had a banking collapse, and absolutely the reason why you need to buy Bitcoin. Now, Gary had a pump. Did it? Am I looking at the right Gary here? Well, one thing I will say is it has moved up a little bit since September, and it did rip up a little bit, and there is a kind of there's a bit of that going on, I suppose. So what you could probably see is Gary coming up here. Now, this is coming down. That's going to be the key for me. June the 27th, Gary will have a decision to make. Between now and June the 27th, Gary will have a decision to make. If it moves up, Gary is likely... I've made a video on Gary, by the way, for all of you out there that are interested on Gary. I've made a video about Gary, and it's a great project. It's got terrible marketing, but there you go. I've talked about you. Many banks are failing. Most banks are failing. The reason most banks are failing is I don't want the show to go on too long, but a very brief explanation. Banks pay you tiny in a bank in America. They're making minimum $50 a year out of your bank, and they're paying you maybe $5 or 50 cents, depending on what bank it is. So they're making $45 every $1,000 you've got in. Now the big boys, who've got 10 million invested in the bank, they're making the bank $500,000 a year, and they're paying the big boy peanuts, maybe $5,000 a year. The American government then goes, right, we're going to set interest rates at 5%, and we're going to pay bonds at 5%. And the big boy says, 5% on my 10 million is $500,000 a year. I'm going to take my money out of this bank, and I'm going to put it directly into government bonds. And then when enough people do that, enough whales do that, the bank goes out of business. And that's what's happened. Government interest rates in America and the UK and everywhere else, staying so high drains the liquidity from banks, because the big people with money will say, I want to get 5.5% on American yield. I'm going to go over there. So it's not you taking your $1,000 out. It's them taking their $10 million out. And why wouldn't they go and earn 5% from the American Treasury? American Treasury is never going to default. First biggest economy in the world. So the banks get absolutely destroyed. There's 62 banks in America on the verge of bankruptcy. And every single one of them is going to go out of business, and every single one of them is going to be bought by BlackRock, Goldman Sachs, or any others of the big 6 companies in America. And they want that to happen, because then they will own the banking system, and then they will become bigger. Why does BlackRock want to offer you an Ethereum ETF? Do you think it's for the good of your health? No, they want that pie. They want all the banks, they want all the money, they want real world assets digitized, they want a 24/7 stock exchange, which they're looking at doing, by the way, in Texas, if you've not seen that news. So there is a whole world of chess going on at a different level to what we're talking about here on a day, that I can go into, but I can't go into. And that is for a different day. Now it is 12:20. We are done. I have got to go and make some videos. Thank you everybody for tuning in. If you're new here, smash the like button. If you're new here, subscribe or follow, whatever you've got in front of you. I am back tomorrow at 11 o'clock. It's Friday tomorrow. I will try and be a little bit, I'll try and do a nice, calm, relaxing Friday show. This one's had more information in it than I think we've done in a show in recent times. Thank you, everybody, for coming and showing up every day. Kishan, thank you. Disclosure, everybody else. See you all in the morning. Take care. Oh, and go and check out USDL and go and see what you think of it. Take care.